Hello, Maverick traders. This is Imri, and welcome to today's currency recap. It is May 11th, 2023. All right, I am broadcasting live from Istanbul, Turkey, and my internet connection is not the best, so please bear with me today, traders. So in today's daily news, there are signs that inflation is receding. However, fears that rates will stay elevated have contributed to today's risk-off mood. So taking a look, first of all, at the S&P 500, little has changed from last week's update, where we're still butting up against this neckline. And so long as the market stays in this kind of sideways consolidation pattern, we're just not going to see too much of a big move in either direction. And it's exactly the same story here with the Vanguard Total World Stock Index. Now over here we have the U.S. Government bonds 10-year yields price chart, and what we see here is that we're trading in this descending channel, and as the market gets used to the reality that we're going to likely remain with higher interest rates for a significant period of time, we're probably going to see those yields repriced higher as well. Now, in terms of today's market outlook, we're sticking with a big fat zero here, just given the sideways nature of the market and how it's been trading. I hope that's no surprise. And in terms of the weekly calendar, tomorrow we're going to have some GDP news coming out of the UK, and then we're going to have some consumer sentiment news coming out of the US as well. All right, now in terms of currency analysis, cryptocurrency down across the board today, and I don't see that trend really changing for for at least the short to intermediate term here. However, of course, there will be bounces along the way. There always are. Now, in terms of fiat currencies, as you would expect on a risk-off day, the yen and the dollar and the Swissy all outperformed on a relative basis, with the US dollar taking the lead and the yen coming in second place. And then, again, given the risk-off nature of today's trading, we see the commodity currencies particularly suffer on, again, a relative strength and weakness basis. In terms of velocity, again, the currencies that I mentioned that outperformed, no surprise to see them on the positive end of the velocity score, while the currencies that underperformed include the commodity currencies and the pound, which ultimately, suffered today after the BOE's interest rate hike. Okay, moving on now into some possible trades, and let's jump over to TradingView. So far the Japanese yen is sticking to the script I've outlined, where we would find support and then see some strong upward moves in the yen. Now I did say, so long as we stay above this support channel, I'm going to stay bullish the yen, and unfortunately we did trade below that support channel. However, we're now trading right back in it. So if we get another strong day in the yen tomorrow and we close back above that support channel, I don't see any reason why we wouldn't head towards those April 26th highs that I've highlighted earlier. The dollar, on the other hand, put in this beautiful double bottom and then just surged today. And I think there's enough momentum in this to take us back towards the beginning of May in terms of its highs. What happens after that, we'll have to reassess if we get there. Okay, the other interesting currency, that I really want to talk about here is the Australian dollar. So the Australian dollar here did break out of this trend line, which I called out as being important, but traded right back below it. So a similar situation, but in reverse to the yen, where, the yen is starting to trade back upwards, whereas the Aussie is trading lower. Now, that's not surprising given the relative risk-off mood that we're seeing in the markets here. Unless we can trade back above that resistance line in tomorrow's trading, I'd be inclined to look for tactical opportunities to be selling the Aussie. Now, the last currency I want us to take a look at is the British pound. So I said that this support line has been maintaining the upwards rally in the pound basically since early February. So now that we've broken below that line, that is a warning sign, to any pound bulls out there. It doesn't mean the pound's going to collapse and completely fall out of bed tomorrow, but it just means that, this is the first sign of real weakness that we're seeing here in this uptrend. And given the extremely overbought spike that we saw in the relative strength index at the end of April, I wouldn't be surprised if the pound has a little bit lower to go before we find some stable support. If we do indeed break lower, then I really like this as a potential support region. Okay, so that's the lower range, from, I'd say, middle of April 17th in particular. All right, so that's my support level that I'm outlining here. Okay, sorry, one more currency I wanted to take a look at is the euro, because the euro reversed from resistance, as I was talking about, and we've now come into a strong support region. The support region has been in effect going back to June 2020. It's this gray box here, and you can see the long lower wick there. Now, that doesn't mean that the euro is going to go ripping higher, but I do see the euro, perhaps outperforming on a relative basis against some of its peers, even if it's for a few days as we rally in a still developing bear market. Whether that is the case or not, I'm not entirely sure. We'll have to kind of play that by ear and take it as it comes. But right now, in terms of short-term movements, I wouldn't be surprised to see this support region at least drive prices higher for a few trading sessions. And that's it. All right, traders, so this was a quick one. I did record a much longer version of this video previously, so this is take 2, but that longer time format for the video made it impossible to upload given the internet conditions I'm dealing with. So in conclusion, as always, trade the currency in play. This is especially true when we're seeing a lot of whipsaw in sentiment. Always focus on proper position sizing and always stick to your trading plan. All right, thanks traders. That's it from me. I will see you soon.